some say we need the financials to rally or to get some strength in that group, but we still seem to keep falling down. I'm here with Ben Willis from Sunrise Securities. So Ben, the stocks have been tumbling. We had an issue with Morgan Stanley last week. And, you know, fundamentally, then we've got all this negative headline about them charging fees for a debit card. So, you know, where are we at with the financial stock? One, on an investing side, and two, just as a group.
Well, I mean, as the stocks continue to try and find a bottom, it kind of reminds me of sliding down a set of stairs when you're a kid. You think you hit the bottom, but you just keep going down and getting jolted by the movement. And the banks, I don't think necessarily have to lead the broad market higher, but they certainly need to be healthy and find a bottom and stop the retreat. There's just so much concern globally about the banking system and its contagion, and I think that went to Morgan Stanley on Friday. The concerns about those that still have investment banking divisions, they're underperforming. So it's definitely a place for concern and just wanting to find a bottom. I think the only buyers in the market right now in the financials are somebody with a lot of nerve and those that are trying to average down their cost in attempts for a long-term buy and hold strategy.
We also had all the news last week about Bank of America wanting to charge a monthly fee to your debit card. Citigroup now saying that they are, you know, it just smacks of desperation on their side.
Well, they warned the government, if you will, that if they change the structure for the swipe fees the way they existed, they were going to look to replace that money somewhere. The question is, you know, we went through the same thing with Spirit Airlines charging for baggage and Ryan Airline charging for bathroom fees. So just how it will take hold or what the loopholes that the branch or the customer managers will be able to eliminate those charges have yet to be seen. But Bank of America, you know, is known to be one of the most expensive banks to do business with. So the question is what that will do to their customer base and their retail side and their want to grow that, or are they looking more to the institutional side?
All right, so for the banks, once they get on solid ground, that's going to make people feel a lot better about this market, but it seems like we got a long way to go until they get to that point.
Yeah, the whole fear factor is still built in. I mean, this entire market has been trading on fear for the last 60 days, and it hasn't stopped today. I mean, we just touched to the positive side as we were talking, and now we are down 50 points again. So the volatility is tremendous, but the banking sector is going to be driven by the fear, whether it's stories out of the United States. The FDIC closed 3 more banks over the weekend, but the FDIC is also closing regional branch offices that they set up. So I guess those regions have seen all the closings they're going to see, or there are no more banks left there. So there's work to be done, but the short-term to mid-term horizon certainly doesn't look very good for the banking industry.
All right, I couldn't have said it any better. Ben saying it. Short and midterm for banks, not looking so good. If you're going to be there, you got to be a long-term player.